Good evening. Ira Epstein with your Spider ETF market wrap-up. And this wrap-up is for Thursday, June 8th, 2023. Well, once again, Donald Trump, just now indicted, making the headlines all over the news. He's been told to report to court on Tuesday afternoon. It's the never-ending saga for this. And while he leads in the race, all this is going to be is a replay of what we saw the last time he was running for presidency. It will never end. This case will do whatever it's going to do. I don't even know if he's found guilty, what it means. I doubt they're putting him in prison over it, so I really don't know what it means and what that's going to be. We'll learn this in the days to come. But it's only one piece of news today. As you saw, you had an exciting day today, and there's a fair amount of red and green on the boards. Not everything is an up on this as you look. In fact, the lead stock we're going to go with is Google, the lead stock in this case, and it was down today as everything around it was higher. UGA was lower, GM down, but they had, I think, a very good announcement at the end of the day. I saw the chairperson there, Mary Barara. I think she's the chair. I'm not sure president or the chair. And they're going with the Tesla. So what's going to happen here is very clear. Tesla is going to become the industry standard for what the charger fit in to go to stations should be. Game's over. If you've got a brain about you in the auto industry, you don't have the infrastructure Tesla has, they are ahead of you country miles, join. It'll make more money for Tesla, yes, but it also makes your car much more desirable because he's already got an infrastructure. Now everybody knows what it should be. Okay, remember how they changed the iPhones? You went crazy. I did. I've been an Apple user, and then every piece I had was no good. Let's get to the point where everybody's on the same. So I actually think it's good news, and I think it's a positive event. They joined Ford now in doing that. Rivian actually up a little bit today, so good news for them. I want that company to survive. I keep looking at the stock. I have my questions about Lucid. The only good thing about that, no, very good thing is, number one, the car's super pretty. Number two, it's super powerful. But number three, they got the Saudis behind it. And how much money can they keep throwing? Speaking about that, did you see the rumor today that the U.S. and Iran were close to a nuclear deal, which I think everybody'd love to see that. The White House quickly came out and said that is a rumor. There is no fact to it. But oil, which dropped 4% in futures on it, only rebounded half those losses, and it's a little lower tonight. I'm not saying it's not true. I don't know. But why didn't the price rebound? That's the question. All right. So the day we come in today, and you were underselling pressure in all the stock indices, basically. They weren't going anywhere. And suddenly, we got the jobless claims. And those jobless claims came out. I'll show you the numbers here. Up 28,000. The world goes crazy. This is what they want. They want to see that the Fed's program's working and that the job openings are happening. People aren't getting hired. Well, I hate to play devil, but I think that's my job. Continuing claims fell 37,000. Those are people that have been getting claims for over a week. They found jobs, more than new claims that came out. What does it mean? I don't know. But I do know this number at 261,000 is the largest claims number since October of 2021, which means it's going in the right direction. Now, here's the event. Is it enough for the Fed to hang its hat on and say, you know, guys, we're going to go into a pause? Or is it one of those events where the traders that look at this number go, you know, we have heard for a couple of weeks running that the numbers were going to be sloppy and all over the board because of a fraud that took place in Maryland. Are we through that and suddenly this is the right number, or is this still part of it? I don't know. And I don't think anyone does. Mirroring the problem and making it worse is nobody's mentioning that this is a Memorial Day number. Well, that means you got a shortened week. This whole thing's skewed in a funny way. I like to go a week to a week, and the real statisticians, they're going to say to you, yes, you're right, Ira, we should see a full week to a full week. That's all. But the market, the naysayers, as I call them, it doesn't matter. If there's a crack in it, they're going to say, buy, you got to buy, this market's going to run away, the Fed's going to go into the pause, and then they're going to pivot right away, and they're still betting it'll happen by the end of the year, and that's what drives the market up. They're like, remember the term, the meme guys that were there, meme guys, and they were buying GameStop and everything and making it go. You don't even hear of them anymore. But that is basically what you're dealing with. So please understand the game. Now, Google, what happened to Google? And yesterday, I'm sorry that I couldn't put out my update, family emergency, and it happened right at shooting time. And that's how these things normally go. It all worked out actually great, but I couldn't shoot. And, this is a free video. Please understand that. When my paid videos come out, I don't know what I do if something like that happened. I'd probably have to put it up, but I'd record it a little later. It was too late at night to do this. All right. So, big break, and by the way, follow through on it today. So you got the higher high, and boom, it comes crashing down, and it goes right back to the 18-day average of closes. Now you've got here a lower low and a higher high. That's not a trend. The bias is down. What made that market stop? Oh, I forgot. Dumb me. Well, look at the Bollinger Band. You went back to it and you broke. Now, you'll say, and you should say, Ira, it hit the Bollinger Band here and it ran away. But here you had this tight range. You'd been in it for a while. It was like a spring, and I kept telling you that back then. Our videos are there. You can go look at them. I said, when it breaks out, it's going to go one way or the other here. It's winding itself up for a move. It was up. This is very different. This comes after you move to the right-hand side. Now you got a real resistance point. At the end of this video, I have my commercial on Bollinger Bands. Please take it. Other things, if you want to see when I say these things, because we were talking these, I do put out my morning subscriber video. You don't get to see that unless you're a subscriber. You can do it on YouTube. You see the blue button on the bottom? Click it. That's how you get to it. Okay. So we take a look here. You lost your momentum down. So we don't have a trend because you got a higher high and lower low. You have downside bias and you're getting a correction in the market. Schwab, you went up to the upper Bollinger Band, ran right into the brick wall. That's it, okay? Until you lose the embedded reading with the red closing at under 79, this break gets bought, in my opinion, by the pros. But you have to admit, it's interesting that today you're down and here's the day you get the wobble and maybe interest rates are going to drop a little bit here, which would help. No more pressure on it, maybe. But Schwab has been able to come up even with the Fed doing these big auctions right now. I'm impressed. I'm impressed that the regional banks have also done well with all that. What about UGA? Don't you think at the upper Bollinger Band, first test, not embedded, you take money off the table? Duh. XLF, right here is where I think you began taking money off the table. Haven't changed my opinion. Is the trend up? Absolutely. Is it embedded where the red and the blue are going sideways over 80? Absolutely not. This is just an overbought market. Let's assume it keeps going up because there's no sell signal. It's a question of do you stay long? Maybe you can get up here, 33.63 to the 200-day average of 33. That would be, what, 33, I think, 65? I don't know. XLI overbought, hit the Bollinger Band, and you've run again. Now, you did come back, and you made what had been resistance. See the green line, the 100-day average? Support. Trend up, bias up, but overbought. I'll let somebody else want to own it. NVIDIA lost the embedded reading. When you lose the reading until it re-embeds, the odds favor that before you go up and over the last high that the market made, this would be the high, price and the 18-day average try to make a run at each other. That's going on right now. SOX lost the embedded reading. So when it peaked out, that was the high. You haven't gone back to it. Will you make a run there? Don't know, but tell you, my work says no, you do not buy these when that occurred. You're waiting to get a new pattern or you're going to that 18-day average. In the home builders, still a powerful market. And by the way, if you're going to get the Fed to wobble, that's bullish. What will that do to mortgage rates? Down they go. You know that there's a big pent-up demand for people to move. I was looking at the average price of rent in New York City today for, I think it was a one-bedroom apartment. Did you read the article? It was in the Wall Street Journal. I think it's $4,000 plus. And these apartments, when they come up, are only on the market 25 days or so. It used to be 35 days at a lower price. They're gobbled up. So, Mr. Fed, New York is not obviously indicative of the whole United States, but it's one of the big cities. What the heck's going on? Isn't shelter supposed to be coming down in price? I mean, it's our biggest city. How does that weigh into the CPI number? Shelter's a big weighting. That's why I bring it up to you. In XLE, now this is an area where I think you're too overbought at the upper band, basically in sideways action, that each time you've gotten up here, you have sold back off to the 18-day average. Let's assume it doesn't, because it's only bullish right now. It's not bearish on this chart. If it keeps going, then I look for the 100 and the 200-day average, 83.70 to 84.14. But the odds favor it's going to give a little up right here. Then we get to the gold market, which here's what I think gold's doing. I think the gold is a fascinating trade along with the euro on the long side and other markets if the Fed goes into a pause. Because if they go into a pause, you don't add to the headwind of higher interest rates by the Fed. You probably get a lower dollar right off the bat. We saw that today, just the idea of it off this unemployment number. It tanks. And if oil falls a little more, is that an inflation number or not? That's what you got to ask. Barring what oil does or doesn't do, because that's a wild card depending on Iran, if the Fed doesn't act, I think that all of a sudden gold comes alive. That's what I'll be looking for. Silver's already come alive. For those of you that watch my financial market update, I pointed out the gold-silver ratio had changed. You went right up now in SLV. This is the objective. You take money off the table and you probably walk away from it. I was with a friend today, this afternoon. My next-door neighbor is a very close friend of mine. He had a Rolex and he needed something done. And I have a friend that's probably the largest reseller in the Midwest of Rolexes. So he's a character. I've known him 30 years. And we run over there and we're in there, and all of a sudden, my guys I was riding motorcycles with 30 years, they pop in. I haven't seen these guys in a decade, and it was laughing a good time. I said, I got to get back. It was my break in the afternoon. And he had bought a stock at $1. And he buys a lot of things. And I go, okay. He says, what do I do? I said, well, how much did you buy? So he says, I bought $10,000 worth. And I said, what is it today? It's $2.34. So I said, so what would be a nice profit if you bought something? Would you be happy with 30%? He goes, yeah, sure. I said, so why don't you do this? Why don't you take off your money, take back your $10,000, take 30% more, and call it a day, because you're not a chartist. You're not going to pay attention to it. You got a free ride. If it keeps going, home run. If it doesn't, you made your 30%. Where do you come up with this stuff? I laugh at it. But I do get a new band for my watch from them. All right. So BND. Market comes here fighting itself at the Bollinger band. I'm sorry, the 18-day average and the 100. Hasn't done anything. So if the Fed's going to make its move and pause, why isn't that coming alive? I look for all the signals and nothing's making sense to me. UUP fell back to the 18-day average and the trend turned down. Yes, down. Lower highs, certainly lower lows. And if we look at the embedded reading, it's still embedded. You didn't lose the momentum yet. So it's a pullback, and until this closes at 79, it didn't confirm. Close it under 79, not 79, under it. Bingo, I get bearish. I open the door up for wherever the Bollinger Band is. That'll be the first number I look for. It's going to climb. It's 28.03 right now. And in the euro, you had lost the embedded reading right here. I kept saying to each day, you know it. I think it's going to the 18-day average. Kaboom. Got there today. So you hear me talking about all this, and you see these Bollinger Bands pop up. Can you do what I do? I can teach this to you. I can do it over one day during the weekend. One day. You'll learn it over that whole week because you'll do it over and over. It's, I think, 15 chapters of videos. Very simple. Give you the charting software. And then I let you see the morning videos where I instill this in you for a couple of weeks. You'll see it in spiders, ETFs, stocks. You'll see it in the futures markets as well. How do you get all this? At the very top here, you'll see an icon. Take a look at this ad. The icon will be there. You can go to our website at iraepstein.com, education. The biggest tool you have is, guess what? Look in the mirror. It's you. I'm Ira Epstein. You have a great day. Learn. I'll talk to you tomorrow. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time. And on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein on the road to your education.